how you pay your
Okay.
mortgage really matters, right? So a lot of folks, it's just monthly payments or biweekly payments, and that's all fine and dandy, but it's accelerated. Accelerated is where you want to go, right? The accelerated biweekly payment, the accelerated weekly payment, as long as it has accelerated at the start of it, that is where you're already picking up an advantage. On 25-year
Okay.
amortization, if you've accelerated your payments, you're dropping your amortization period by like 3 years, right? Just
Okay.
because what happens with an accelerated payment is the little bit of extra that you put on to that payment, and it is truly a marginal increase on the payment. That little
I was
bit,
gonna say,
go ahead.
3 years, if you're doing accelerated payments, doesn't seem like that big of a jump for accelerated payments.
But just think, it happened the first day, right? So just by simply structuring your payments to an accelerated payment, the 25-year amortization that you have on your mortgage is now 22. You haven't even made a payment yet, because what happens is every little bit extra on that accelerated payment, when you account for that little bit of extra on every single payment throughout the year, you're effectively making another payment in totality on the mortgage. Only that one whole payment is going directly to the principal.
Okay, so hold on, let me get this straight. You're signing your mortgage, you bought a house. How does the standard accelerated payment work? Is it so my mortgage, for example, just we'll use mine, comes out on the 28th of every month, end of the month, and it's 1,300-ish. So if we were to do an accelerated payment, is that is that another $1,300 payment coming out sometime in the month, or is it on top of my already established mortgage payment?
So let's say it's like, let's look at it like biweekly, right? Like, so you've got your monthly payment, or you can split it and do it biweekly and pay twice, right?
Okay, so 650 every 2 weeks.
If you do an
Yeah.
accelerated biweekly payment, your biweekly payment is going to increase just a little bit. Okay, so it's still going to happen at the same time, biweekly. It's just you're paying a little bit more on the payment. And when you calculate that little bit more that you're paying on each one of those payments over the course of a year, you've effectively taken an entire payment and put it right on the principal. So
Okay.
it
So when you say,
accumulates those little bit extras throughout the year, and then the bank
yeah,
does that calculation. And then effectively what's happening is that accumulated amount is going straight to the principal, because on every payment there's principal and interest that are split, and it's it's the gross part about the amortization schedule when you get it and you realize in the first 5 years what you've actually put on the principal as opposed to what you've paid in interest, right?
yeah, it's gross.
And so by doing the accelerated payment, you're going to see that shift, because that little bit extra on each one of those accelerated payments is going to accumulate to effectively be one full payment that would have went directly to the principal. And
Okay.
to fast track the principal is truly the quickest way.
So just so I understand this. So I start out with my end of the month payment, $1,300. I then go to biweekly. So now I'm paying 650 on the 14th, 650 on the 28th. We're then adding a little additional extra on the first biweekly to
And the
equal.
second, so every single payment's going to have a
Oh,
little extra to it. Oh yeah, every
yeah.
payment that moves forward. So like you're going to have biweekly versus biweekly accelerated. The the frequency of the payment stays the same. It's just the amount that each payment is just a little higher, right? So instead of being 650, right, every biweekly, it might be like 675 or whatever, like just a
Okay. So
small
like
increase.